Hello, my name is Joe Hoyle, and I'm on the faculty of the University of Richmond here in Richmond, Virginia. This is the financial accounting textbook that I wrote along with C.J. Skinder, who teaches at the University of North Carolina at Chapel Hill. I want to use this video today to introduce you to the course, to our textbook, and to Chapter 1. We have taught financial accounting for decades. I believe that this is a very useful course, it's a very interesting course, and it can be a very valuable course to you as you enter the business world after you leave college. We want you to succeed. We want you to be able to use financial accounting to make good business decisions so that in whatever career you choose to follow, you will have a successful time, that you will make good decisions. Now, you may already know this textbook is written in a question and answer format. So I thought for our first video, it would only make sense to do it in a question and answer format also. So we'll look at a few questions here very quickly, just to give you an overview of what you can expect to see in this textbook. Our first question is the obvious one. What is financial accounting? If you're going to take this course, if you're going to read this book, if you're going to learn this material, you need to start by knowing what financial accounting is. In simple terms, financial accounting is the conveyance of information about an organization. Now, if that was the definition in its entirety, then I don't think that would be terribly interesting. It's the rest of the definition that makes this such an important course and such an important textbook. And that is that financial accounting is the conveyance of information about an organization so that outside users can make decisions about that organization. It is that decision making that really makes this interesting. In life, you have to make decisions about organizations. The more information that you get about those businesses or other organizations, the better your decisions will be. So when you think about this course, when you think about what we're trying to cover, keep in mind it's that conveyance of information about the organization so that you can make decisions. As you might imagine, financial accounting is often compared to a language because of the idea of sending out the information. Now, you may be deciding to become an accountant. Then your interest would be in the conveyance of the information. But if you're not going to become an accountant, and I imagine that most of you will not, then your interest will be in understanding the information that is being conveyed. Either the sending of information is important, or the receiving of the information is important to you. It seems to me that our next obvious question is, what kind of decisions do outside parties have to make about an organization? We have based the coverage here on decision making. So what kind of decisions have to be made? When you're out in the business world, what decisions are you going to make? Well, as the book points out, if you work for a bank, you might make a bank loan to an organization. Do they deserve that money? If you're selling things to a company, you may have to make the decision as to whether they can buy on credit. Are they trustworthy enough that you can give them the material and let them pay for it later? Or if you're an investor, you may be looking to decide whether to buy the ownership shares of a business organization. Many people in our world today are owners of shares of stock of the corporations that do business here in the United States and around the world. Those are very important decisions. Getting the information so that you can make them correctly is vitally important to your success. I have mentioned that you can give credit to a customer, or you can give a bank loan, or you can buy ownership shares of a company. Why would you buy shares of a corporation? What good does that do you? Why do people do that every single business day? Well, the answer to that question is fairly easy. At the simplest terms, you buy ownership shares because you hope those shares will go up in value. If the company makes a profit, if the company does well, then the value of its ownership will go up. You can then sell those shares and make a profit. That happens all the time. You buy ownership shares, the company does well, and you sell them and make a profit. Or you can also get dividends from those companies. Companies that do well, companies that prosper, will often share that prosperity with the owners by giving cash dividends. Many corporations do that on a regular basis. Well, now that's why you would buy ownership shares. Why do you loan money to companies? We mentioned a bank loan. In a bank loan or other debt, you give the money because you want to make interest. You loan a company $1,000 and they pay back $1,075. The extra $75 is the profit on that loan, which we call interest. So either by buying shares or by giving credit, we are trying to make our own lives, our own businesses more prosperous. How does financial accounting help us make wise decisions? One of the things we have mentioned here is that what you're going to learn in this course is going to help you make better decisions. How does that happen? How do you make better decisions? Well, the goal of financial accounting is to paint a portrait of the organization, to allow you to see what that company looks like. If the company is 1,000 miles away or 10,000 miles away, the financial accounting information can help you get a picture of how it is doing. That portrait will show you the financial health, the future prospects of that business. That is the main reason that people look at financial information, to judge the financial health and the future prospects of the organization that presented the information. If you know how good, how healthy, how economically sound a company is, then you can decide whether to loan the money or to buy the stock or sell the stock. Those kinds of decisions can be made in a good way. Let's assume that you do know the financial health of a business, that you do have a portrait. We sometimes say in accounting that accounting information should be transparent. It should let the user look right through the information to see what the company looks like. What would you do with that information? Ultimately, what are you trying to get from the accounting information that you see? It seems to me that if you're an investor, if you're buying ownership shares of a company, then what you want to be able to do is to predict two things. You want to be able to predict stock prices, so you'll know whether to buy or not buy the shares of a company. And you want to be able to predict dividend payments. If you look at a company, if you look at the financial information, if you judge its financial health, then you should be able to make a reasonable prediction of the stock price and a reasonable prediction of the dividends. And that gives you such an advantage when you're making decisions about the company. On the other hand, if you're planning to loan money to a company, if you're planning to give that company credit, your interests are a little bit different. What you're trying to do there is to estimate whether the company can generate enough cash to pay the money when it comes due, plus any interest. If you know for a fact that you'll get your money back, then it's good to make the loan. Unfortunately, you don't know that for a fact. You have to anticipate that. And the financial accounting information helps you make that judgment so you'll know what to do. There is so much to learn in financial accounting. It can be so useful to you. I do believe that you're going to enjoy this course. You're going to learn the structure and the terminology of financial accounting, and you're going to be able to take that with you into the business world and help you as you seek to become a successful decision maker. Read chapter 1. Best of luck.